Hi guys, just wanted to do a really quick video just running you through one of the strategies that I'm currently using. It is a variation of the martingale strategy and it is 1 minute, okay? Now, the martingale strategy, in case you don't know, would be placing 1 minute trades in the direction of the market. So if you loaded up your binary options broker and you saw that 55% of the market were trading the Euro USD upwards, you would place a trade going in that direction for 1 minute. Now, if that trade lost, you would then place another trade immediately after that one of a higher amount, and that would cover the loss you've made off the first trade plus give you a bit of profit. Okay. Now, I was doing this for a little while. It was working absolutely fine. 8 out of 10 times. Now, what I did find was the market every so often would trend in one direction for maybe 9 to 10 candlesticks. Now, what that means is I would need an account balance of a size where I can place 9 or 10 trades to maybe make £5, £6, and I could be risking £600, £700. Now, the risk reward on trading that amount of money is ridiculous for £5. So what I've done, I've adapted the strategy a little bit. I'm just going to run you through it now. So what you want to do is I would advise TradingView. Now TradingView is free to create an account with. Okay, so if you get set up with TradingView, you want a 1 minute chart. I'm going to use Euro USD because I find that as the best currency pair. It's the most predictable, and it's the one that gives me the best results. So what I've done, I've got two indicators. Two is all you need. Okay, so the first one is the RSI, which is Relative Strength Index. So what this does is it looks at when the markets are overbought or oversold. Now, if it's oversold, it usually means we're due a reversal. So if it's right down where this green line is here, it means that the market is likely to trend back upwards at any point. Okay. Now, similarly, if it's at the top, it's going to at some point come back down. Okay. The other, so the way to add the indicators on. So you just go onto indicators. You want built-in indicators, and then you just search for RSI, Relative Strength Index. Click on that, and that will put it there. And just leave the settings as they are. You don't need to change any of that. Now, the next indicator I have is Bollinger Bands. Now, what Bollinger Bands are dynamic support and resistance. So they move with the market. The idea of Bollinger Bands are if a price hits the top of one of the Bollinger Bands here, it means that it's hit the resistance point and it's likely to come back down. Okay, so same at the bottom. So if it hits the bottom of the Bollinger Band, it's likely to reverse in an upward direction. So what you can do, you can combine both of these indicators. And just to tell you how to put the Bollinger Bands on, I don't think I told you that bit. Again, built-ins, just type in Bollinger. You just type in Bol and it brings it up there. Okay, so you click on that. As I say, keep the settings as they are. You don't need to mess around with the settings. So when you've got these two indicators on your chart, okay, you want to just check that you haven't got any economic events coming up. So if I was doing this at 5 to 9 and a European result came out, such as this one here, the German business info, as soon as this result hits out, it's going to send the market in a certain direction. And we don't want that. We want the market to be stable. So you need to make sure that when you're using this strategy, there's nothing going on during the economic calendar. Okay, so you could do it between 9 and 11 o'clock, 11 and 3. Then times there's nothing happening. Absolutely fine to do it then. So onto the strategy. So what we're looking for here is a candlestick to break to the top or the bottom of the Bollinger Band. So let me take this one as an example. So if I saw this candlestick and it finished at the top here, It's quite high on the RSI, so it's above 50 on the RSI, which means that it is slightly overbought and it's hit the top of the Bollinger Band. So them two factors mixed in together mean that there's a very strong chance that that the price will reverse. So what I would do, I will place a trade going down for 1 minute of the value of £5. Okay, so if that was to win, great. You've made £4 odd on top of your £5 investment. If that lost, I would increase my trade amount and trade it in exactly the same direction, so down again, with a higher amount of money. Okay, that's up to you to decide. But I choose an amount of money that's still going to give me some profit. It takes into account my first trade. Now, the difference being is it will get to a stage where if I have 10 candlesticks going up and I'm trading it going down, I will get to £30 of my account balance, or well, let's take that as an example. So if your account balance is £300 or dollars, my advice would be not to trade any more than 10% of that account balance using this strategy. So if you lost £30 using this strategy, which is very unlikely to happen, I would stop. I would move on. I would try it again later in the day or even the next day. Okay, and what that's going to stop you doing is burning your account out. Now, what I've found is I've been doing this for about 2 months, and I doubled my account in the first week. One other thing you've got to make sure as well is that there's enough volatility in the market. So if you're seeing candlesticks like this here, so these types of candlesticks, them types of candlesticks, that means there's not much volatility in the market, and I would refrain from using the strategy. The candlesticks I am looking for the strategy are ones like that there. Now that means that there's a lot of volatility in the market, and it means that when I place it going down, it's going to be well in the money and not just flickering between in and out. Okay, so you need to make sure that the market conditions are correct. So if you get all of them elements that I've just said in place, you will make a lot of money. Okay, so that's the strategy explained. Give it some practice on a demo account first, and then before you try it in with your real money, just get used to it. Get used to what I'm saying. Rewatch this video. Make sure that you've got all your indicators in there. Make sure everything falls into place before you actually do the strategy. Okay, so that's the strategy explained. One other thing to talk to you about is me and my business partner Ilias have just started doing signals. Now, what we do is we scan the markets through the day, looking for various opportunities to place trades. And what we do is we send them through on our WhatsApp group, and we've got quite a lot of people already involved with this. We're giving 5 days free trial. So if you want to get involved with that, drop me an email. I'll put my email in the description. Drop me an email, and we will get you involved in that. Now, the broker that I advise using the signals with that we provide is StockPair. Now, the reason for that is we will be sending 5-minute signals, 10-minute signals, 30-minute signals, and 15 minutes occasionally. Certain brokers are set up where you can only put certain expiry times on, whereas StockPair, you can get the expiry time to match exactly what you want it to be. So as soon as it's hit a certain point, you can place a 5-minute trade going in the direction that we've told you to. Pick your amount and place the trade. And the other thing with StockPair is they've got a really good app. So if you download the app on your phone, you can be placing our signals wherever you are. So you can be at work, you could be on holiday, you could be anywhere, and you can still make money on the go. Okay, so that's it all explained. I'll leave all the details in the description. If you can drop me a like and a comment, that'll be absolutely fantastic. I will be doing more videos as well, so subscribe to that and you'll see every time I post a new video. Cheers, guys.